So, and somebody say, well, what's the big deal? So
Yeah.
they say it's a hobby.
Right.
Well, the big deal is that this issue arises upon audit. Now, one of the things you must realize is that a Schedule C, which is self-employed, losses when you have other sources of income like large wages or rents or whatever,
Or even small wages or rent,
Yeah.
or that.
is the highest audited tax return you can have.
Right.
All right. And one of the issues they look for, and the IRS is renewing their interest in the hobby loss stuff because of need of revenue. So, when
Well,
they come in,
Two things, Tom. I think and here we are in 2011, I think that we have more people trying to create a revenue stream out of their hobbies because of the poor economy.
oh, definitely.
Yeah, so I mean, there's two things. One of which the IRS sees as spike in people reporting these sideline businesses. And secondly, secondly, there's this pressure from above to create taxable revenue. And believe me, there is that kind of pressure.
Oh, definitely. So the big deal is you get audited, they come in and they raise the hobby loss issue. You have a nice photography shop, and so you're generating some revenues, but you've been showing losses every year. And so they can go back at least 3 years and sometimes up to 5 in extreme years if they feel there's tax evasion involved in this issue. And they can throw out all those losses. So you've been saving $5,000 a year on taxes for 3 years, so you're going to have to pay $15,000 back to the IRS.
With interest.
Plus interest, plus penalties.
Right.
And so by the time the bill comes due, because the audit gets finished up, some of those returns are now 4 and 5 years old because they started the audit a year and a half ago by the time it goes through the procedures. Some of those earlier years could double. And so rather than $15,000, you might be into it for $20,000, $25,000.
Which
So
is bad.
bad. We don't like that sort of thing.
No, we don't like that at all.
So you want to fight it and say we are a business. If it's a hobby, also when they make the changes, what they do is they take all the income and you report it as miscellaneous income on the front page of the 1040.
Right.
So
Okay, that's right.
Yeah. So it raises your AGI, which might limit things like medical deductions.
AGI, Tom?
Adjusted gross income. I'm
Okay.
sorry.
Okay.
I've been speaking this stuff for so long, I can't help myself. I'm actually in a 12-step program for not
Okay,
using
I'm
it.
hopeful of that.
But,
And you've accepted it. That's
yes,
good.
and
all
I
right.
deal with it, and I stand up in front and tell them.
Okay.
But anyway, miscellaneous income raises your adjusted gross income, and so you lose some of your deductions, some of your medical deduction. Also might push it high enough where you start losing some benefits from rental properties because you make too much money, and there's all these adjusted income levels for all sorts of deductions. Could be credits for education, and earned income credit, all kinds of ramifications. And you don't get the deductions except as an itemized deduction on your Schedule A. So if you itemize deductions, at least you get some benefit. It's limited. But if you don't itemize deductions, you might not get any benefits at all. So
What, pray tell, is our Schedule A?
That's itemized deductions.
Okay, then.
Medical. Glad I got Jim here to keep me straight. He humbles me sometimes with his ability to talk minutia. But mortgage interest, property taxes, medical expenses, charitable contributions, that's
Okay.
schedule. So
Okay, so,
it's-
and if we are itemizing, typically we would have a Schedule A. Typically, if we had our business, we would have Schedule C. But when we have a hobby business with a stream of income, it would be under miscellaneous income.
Yes, and itemized deductions. So
Right.
if you itemize your deductions, you're going to get some benefit, but if you don't, you might not get any benefit at all.
Right.
And then you only get these deductions to the extent that you have hobby income. So you could break even but never show a loss. That's why the audit can be so crucial, is that it takes away all your
your
losses,
losses.
all your losses, and so you have to report all that as income for each year that they audit.